Welcome to Money First CEO, the podcast for business owners ready to run their business like a boss and make their money work smarter, not harder. I'm Harman Johnston, bookkeeper, Profit First professional, business coach, and mum of two from Sydney, Australia. I've built a thriving business by mastering money habits and systems that create real freedom. This show will help you take control of your finances so you can build a business and life that truly works for you. Every episode delivers one powerful takeaway you can action right away for more clarity, confidence, and cash. And from time to time, I'll be joined by special guests, fellow entrepreneurs, experts, and real business owners, sharing their money wins, lessons, and insights to inspire your next move. Because when you put money first, you unlock the options and freedom you deserve. So hit follow, grab your coffee, and let's dive in. Hey there, and welcome back to the Money First CEO podcast, where we believe if you put your money first, the rest will follow. I'm your host, Harman, and if you're listening to this anywhere near June, then this episode is for you. So, end of financial year is coming, and I know most of you have been meaning to get on top of things. You know there are things that need to happen before June 30, but you're not quite sure where to focus. So, it keeps getting pushed back. And here's what I want you to take away from today before we even start. So end of financial year is not about tax. I know that sounds odd coming from a BAS agent, but hear me out. Yes, tax is part of it. But if the only thing you're thinking about at the end of financial year is your tax bill, you're missing the bigger picture. So end of financial year is mostly about making better business decisions. It's the one time of year where you get to step back and look at the full picture and ask yourself whether this thing is working the way you want it to. And by this thing, I mean your business. That's not compliance, that's leadership. And today I've got 7 things you should do before June 30. They're practical, they're straightforward, and none of them require you to be a finance expert. Let's get into it. Number 1 is get your books up to date. I know. This is number 1 because everything else on this list depends on it. If your books aren't current, the numbers you're looking at aren't reliable. Your profit could be off, your tax estimate could be way out, and any decision you make is based on incomplete information. And I see this all the time. Business owners get to June and their zero is months behind. Transactions haven't been matched up, invoices haven't been recorded. It's just not where it needs to be. Up to date means everything in zero matches your bank account balance. Every transaction is sorted and reconciled and nothing is sitting unresolved. We had a client come to us last May with zero being 5 months behind. She knew it was a problem but kept putting it off. Life got in the way. We got it cleaned up in 2 weeks and she was like, I didn't even realize how much that was weighing her down. And keep in mind, your accountant needs clean data to do your tax return. If you hand them a mess, it either costs you more or they're working with bad numbers, and neither is ideal. So if your books are behind, get them sorted this week. That's step 1. Number 2 is chase what's owed to you. You have to look at what's outstanding, what's owed to you and what you owe others. Pull up your unpaid invoices. How much is in there? How old is it? Are there invoices in there that are 60, 90, or even older, still unpaid? Because money you've invoiced but haven't collected isn't actually in your business. It's on paper. And if you're making decisions based on what you've billed rather than what you've actually received, you're working off a false picture. And end of financial year is the perfect time to follow these up if you haven't had the time to do it already. Send the reminders, make the phone calls. Most of the time, it's not that people don't want to pay. It's probably because the invoice got lost or it slipped through the cracks. And a quick follow-up usually gets it sorted. One of our clients did a proper chase last June, and over 3 days, she collected $42,000 in overdue payments. That's 42 grand that had been just sitting there. And that money went straight into shoring up her tax account and topping up her buffers. It completely changed how she started the new financial year. Then flip it around. What do you owe? Any supplier bills sitting unpaid, super payments due, anything outstanding with the ATO? Get clear on both sides. The new financial year should start clean. You don't want to be dragging old obligations into a fresh start, ideally. Number 3 is check your cash position. Know exactly where your cash sits right now, not roughly, actually know it. If you're running Profit First, open your banking app and check each account. Tax, profit, owners pay, operating expenses, is each one where it should be. If everything is in one account, this step is even more important because that balance you see, it's not all yours. Part of it belongs to the ATO, your suppliers, super, And if you're mentally treating it as available cash, you're going to get caught out. Is your tax account enough to cover what you'll owe when your tax return's done? If there's a gap, you still have a few months to get on top of it. A gap found now is manageable. A gap found in October, March, or May next year will arrive as a problem. And how many months of running costs does your operating account cover? Have you been paying yourself consistently? This step always sparks good conversations. Sometimes it's we need to top up tax. Sometimes it's we actually in a strong position. Let's think about a profit distribution. But you can't have those conversations if you don't know where the cash is. So check it this week. Number 4 is get ahead of your tax. All right, now is when we talk about tax. Not the whole tax world, just enough so you're not caught off guard. The goal here isn't to calculate the exact number. That's your accountant's job. The goal is to have a rough idea so that when the bill arrives, it's expected, not a shock. Think about what you've earned this year. Think about what you've set aside. Is there a gap? If there is, you've still got time to close it. One thing that catches people every year is super. If you want to claim super as a deduction for this financial year, it needs to be received by the fund before June 30. Not lodged, not in transit, actually received. So process it early in June. Give it time to land. Same goes if you're considering making extra super contributions for yourself to reduce your tax. It's a good strategy, but the deadline is a deadline. Once July 1st hits, that window is closed. I had a client last year who didn't think about tax until August. His bill came in at $68,000 and he didn't have it. Spent the next 6 months on a payment plan, stressed the whole time. Compare that to clients doing profit first. Bill comes in, they check their tax account, transfer the money, move on. Same obligation, very different experience. And that's the difference between reacting and preparing starts now. Number 5 is review how the year actually went. This is where we move beyond compliance and into strategy. And for me, this is the part that matters the most. Did you actually make money this year? Not were you busy, not did your revenue go up, did you actually keep more than you spent? Because those are two very different things. I've worked with business owners who had their biggest revenue year ever, but ended up with less in the bank than the year before. More came in, but even more went out. And at the end of it, there wasn't much to show for all the effort. Pull up your numbers for the year. What came in, what went out, what's the gap? Is that gap bigger or smaller than last year? We did this with a client who runs an architecture practice. Revenue was up 18%, looked great on paper, but his cost had gone up 31%. He had new staff, better software, a bigger, nicer office, all felt like right moves at the time. But the result, he went from keeping 14% of every dollar to keeping just 9%. He had no idea until we laid the numbers out side by side, and that insight completely changed how he planned the next year. He didn't need more revenue, he needed to get his costs under control. And that's what this review gives you. Not just a look back, but a clear picture of what needs to change going forward. And that's where we're different from most bookkeeping practices. We don't just tell you what happened, we help you understand why and what to do about it. Number 6 is pay yourself and look at tax savings. The person who built this business and deserves to benefit from it is you. If you've been running profit first and your profit account has been building all year, end of financial year is a natural time to take a distribution. If you haven't been doing quarterly, if you did, then you should still have a buffer. And that's your reward for running a profitable business. The system created real profit. Don't just let it sit there indefinitely. Talk to your accountant about how to take it properly based on your structure. Too many business owners never take profit. They leave it in the business, tell themselves it's safer there, and never actually enjoy what they've built. You deserve to be paid and you deserve to benefit from your work. While you're having that conversation with your accountant, ask about tax savings, opportunities before the year closes. Things like extra super contributions, prepaying certain expenses, or writing off debts you're never going to collect. One of our clients had this chat in late May last year. Based on the numbers we put together, her accountant identified that she could make an additional $25,000 super contribution before June 30. That one decision saved her over $8,000 in tax. $8,000 from one conversation in May. If she'd waited until August, that door would have been closed. So here's my rule. Call your accountant in June, not August. June is when you can still make the moves. August is when all you can do is look back. And number 7, set your targets for the new year. Most business owners start a new financial year exactly the same way they ended the last one. No plan, no targets, no real clarity on what they're working towards. Then 12 months go by and they wonder why nothing changed. So before July 1st, let's get clear on a few things. What revenue are you targeting next year? What do you want to keep as profit? What do you want to pay yourself? And what big moves are you planning? Whether that's a hire, a new service, or an investment. It doesn't need to be complicated. One page, revenue target, profit goal, owner's pay, cash buffer. That's your money plan for the year. I have these conversations with our clients at Blue sometimes. We use the data from the profitability review and the cash position check to build a simple plan, and it becomes a compass for every financial decision over the next 12 months. One of our clients did this for the first time last June. 7 years in business, never once set a financial target, just worked hard and hoped for the best. We set her targets together, and 12 months later, she hit every single one. And she was like, for the first time, I felt like I was actually steering the business instead of just keeping up. And that's what targets do. They give you direction, and direction beats busyness every time. All right, now let's bring this all together. 7 things before June 30. Get your books up to date, chase what's owed to you, check your cash position, get ahead of your tax, review how the year actually went, pay yourself and explore tax savings, and set your targets for the next year. Now, none of this is complicated. It just requires you to stop, look at the numbers, and make a few decisions. That's it. Because end of financial year isn't about surviving the end of the year. It's about setting up the next one. So call your accountant this week, not to ask what you owe, but to ask what decisions should I be making before June 30? And that one conversation could save you thousands and completely change how you start the new financial year. That's it for today's episode. Keep putting your money first and the rest will follow. I'll see you in the next episode.
Thanks for hanging out with me on Money First CEO. If you got value from this episode, hit subscribe, drop a 5-star review, and share it with someone who's building their business too. All the goodies are in the show notes, and you can find me on socials for more tips and tools to help you. Until next time, keep putting money first and the rest will follow.